January 28th wasn't so. January 28th was the byproduct of other things like FOMO, the gamma ramp. At that point, the stock was just running. Uh, but yeah, you could go from the 28th back to that, and it's 26 trading days. But maybe while we're looking at this, I can give you guys a better idea. So here we have the T plus 3 from expiration. So we have like the first day was kind of flat. Second and third day, we moved up. Um, and then that kind of moves into this 35, where we see this big spike right on the last day. And that's 35 from the roll. And then we have 35 from the expiry, which also precedes another big spike. And we kind of, so in this period where these overlap, we start to see some upward pressure. And then lastly, we have 35 days from the T plus 3 window. And that's where we really start to see it run up hard. And that's here. So you see how they kind of like this T plus 3 window kind of kickstarts it. And then they're able to suppress it through here. But once the fail from this first window, once the fail from this first one triggers, we start seeing some upward movement, and then that moves into the fail from the next one, which triggers more upward movement, and then finally the fail from the last one. So you see what I'm talking about, like how it amplifies as it moves up, and then gamma ramp and everything else on top of that. So maybe drawing this out for you guys like this helps, like understand what I'm trying to point out. Now I feel like this graph is actually in fact better than the one I drew for the DD, but am I vaccinated? What a weird fucking question. I am. But I feel like it's rude to ask people about what medical treatments they receive. I think this came across. I was very tired last night. I'm not. I don't really even remember making the video DD. HIPAA violation. Have you had your MMR? Of course. Puts on HYG junk bonds. I have them. They're up pretty hard. How is HYG looking bad? This is the daily. I need to catch the minute. Looks like it's going to come down more still. Seymour Dollars mini in my youth. No lads. Not my thing, but to each their own. My mom believes in the healing power of crystals, and she says, this, yet another, I shouldn't watch you. It's another reason that you shouldn't watch me. That's fair. What was my last dental cleaning? Like 6 months ago. Anything else? And then also those spikes in FTDs can be seen in the SEC data as well. And that cycle plays out, and the one previous to it play out in a very similar fashion. They failed 2 in a row before January happened. But obviously when we were trading down at like $3, it was a drastic increase in price considering the price we were trading at the time. So there's two of those cycles for confirmation of what happens when it fails, but we don't know if that's going to happen again this time. ASTS had a big run up with a very small flow. Also STA can bounce back with the market turning. I don't know. Watch out for those stocks, especially right now, the ones that are like small float, high short interest. If they've already run, there's a far lower likelihood of it doing it again. Yes, Mega Mole. So if we draw the same, does anything interesting happen? Okay, so the SPY failed the second shoulder test of 435, so we might see it drop now. So now it'll be we'll determine that if it like continues to fail, which is pretty high odds, like 87%, it'll continue down. With the resistance, it may like go like down like over more time, but we'll see. Or it'll just, beat the odds 13% and break out to the upside. All right, let me go back to GameStop's not doing anything right now important. So let me show you how this plays out on our current chart. So we have T+3. Right, which is some expected price action, but here's the thing with it is we have market issues going on right now, so the volume of this price action over the next few days may not be enough with the negative market shit going on to move us up significantly. Then we have 35 from here. Wait, is that 34? There we go. And then we have 35 from there. And then lastly, we have 34 from there, which brings us out to October 22nd. Or I'm sorry, October 26th is the final T plus date, which gives us a total from today of today is here T plus 36 from today. which would be T plus 37 from the rollover, which is technically T plus 35 plus T plus 2. And then if I'm not mistaken, that then peaks T plus 6 out. It should be. 2. No, 2. Yeah, T. So within T plus 2 of that last fail is when we peaked in January. So if this plays out the same way again, we should see the peak of this on 10/28. Oh no. GameStop doing a dip. Okay. Hold on. I'm going to close out some options, my 240s. Should keep the 210s? I'm going to keep the 210s. It's just a vertical line. Who licked my dumpling? It's in the drop down menu for your lines. You have horizontal, vertical, trend line. The first square is expiry. So yeah, the first square is T plus 3 from the expiration date. The next one is T plus 35, then T plus 35, and T plus 35 from roll, expiry, and T plus 3 following expiry. And then it looks like the peak of those FTDs strike within 2 days after the final cycle ends. Or the final T plus 35 window. Getting out of your IV place, yeah. So I closed the 240s and those I closed my 220s, 240s, and those 450s that I had on here. But I'm keeping my 210s in case we actually do move a little over the next couple days. The market's stabilizing a little bit. We'll see if it continues to move down, but probably not until later this afternoon. I can't thank you enough for the countless hours you research for us Pickles to give us your answers. Thanks, man. Oh, something else interesting about that I don't know if I pointed out in the DD, but if we go back to here and you look at the SEC data, you'll see that like every like 6 days we get another bigger and bigger spike of FTDs moving through this. Also at the end of this is when our short interest got reported. So from here, we got put on the threshold securities list. So from the from the expiry date onward, we were placed on the threshold securities list. But like every like 6 days of this, there's like a big spike in FTDs, and increasingly more and more each time. And then the same thing happened on the previous cycle. If we can hold on, auto, there we go. So the previous cycle also only had a small bump at quarterlies, and then it ran flat into earnings and was shorted down. And then it picked up a little steam coming out into that T+3, right? And then nothing. And then we had this big bump, which was kind of the anomaly through this stage. And then nothing until shorted it back down, and then nothing until it ran up again into the quarterly options. So this is where the cycle starts, is those quarterly options. And then they failed again, right? Because like, so these two happened back to back. And if you look at the other type of cycle where they roll, we run into the roll and then dip after, right? So this happened in June of last year. It happens here in March. We run up and then we dip. And this is quarterly options over here. And then again in June, over here, we run up into the roll date and then dip after. But this time, we only ran up for the quarterly options, right? So this is the same as those cycles in September and December of last year, where we run up before the roll for the quarterlies, and then we trade flat. And so now we should expect to go up, flat, and then some sort of anomaly should occur.